Hey guys, it's Max Convexity. This is going to be a 5-minute option strategy lesson, or not really a lesson, but anyway, we're just going to talk options. All right, so we have earnings coming up. Tomorrow we have earnings in CRM, which is Salesforce. And last week in my 5-minute option update, we put together a trade for the Salesforce options. We're going to look at that trade and see how that's doing. But Salesforce announces their trade after hours today. We're also going to look at putting on a new position, and I chose MARA. I believe it's a Bitcoin miner, and it's hot. The reason I chose it is because volatility is jacked like crazy. But of course, volatility is jacked on all these options. But this is what I'm trying to take advantage of, or what anyone's trying to take advantage of when they do an option strategy for earnings. And this is what ULTY is going to be doing, I'm pretty sure. Similar strategies. They're trying to take advantage of the higher volatility and the higher call skew. These ones that are so bullish, look how much call skew is in MARA. So the price of MARA is, where's the damn price of MARA? 28. So it's 20, let's call it 29. It's bouncing right around. So what you can do is you can look at one standard deviation. Well, actually, the brown box here is, let's look at it this way. See this where it says implied volatility 303, that's on IV, or 5 points. Well, that means 5 points up from the money and 5 points down. So on Tasty Trade, they just draw a box here. So the top of the box, the options on the call side cost $1.41. Well, at the bottom of the box, the options on the put side cost 50 cents. So it's about 3 times, calls are about 3 times as expensive. So that's how I develop this strategy. I'm doing a strategy where I'm trying to sell that expensive call. And what else I'm trying to do is I'm trying to put it right about where I think the market makers expect this to go. The expected move for this stock is 35.36. Now, up or down, the expected move doesn't tell you direction. So I'm just going to guess up, but I'm going to aim for the expected move to the upside. So the way to do that is to do what's called a broken wing butterfly. We did a couple last week, and put the sold strike right where you're trying to target. If you've ever watched my Defiance updates, and Defiance sells options every day, the strike price of the option they sell, the strike price is always the max profit. Whenever you're selling options, wherever the strike is, that's where the max profit is of the sold option, or even if it's an option spread, the sold strike is where you want to go. This is going to be an option spread. This is with 3 different options. So let's go over here to option strat. In a broken wing butterfly, or any butterfly, you sell 2 options in the middle. So I'm using the 36 call. That's about where the expected move is. Then you buy 1 option above it and sell 1 option below it. The reason it's broken wing, if it was an equal butterfly where the wings were the same width apart, it would have a profit loss graph like this. I don't want a loss on the upside and on the downside. I just want a loss on one side. So you can do what's called breaking the wing. You can take this back. I believe this was a 26. Yeah. And that's called a broken wing butterfly because one wing's broken. It's, isn't as long. So I have a feeling my 5 minutes are using up. But look what this trade does for us. If we get the move to the expected move, 35, 36, we're making $400 or $500 with this strategy. If we get the expected move the other way, we're losing $300, and that's because of the skew. That's because we're monetizing this high call premium, and then we're so it's not a naked call. We're buying a couple of calls around it, and that makes a profit loss graph like this. When we break the wing, it means I make it where there's no loss to the upside, because we don't want a situation like Nvidia or one of these things that goes up 20%, 30% or something, and then you end up losing money. So this, in my opinion, is the best way to do earnings trades, or one of the best ways. It's one of the best ways. So let's just save it, and we'll see how it does. These options expire Friday, so we're going to save this, and it's just going to be called our Mara earnings play. So we'll see how that does. Now, let's look at view save trades. Now let's look at the one we already have on for CRM and see what we should do with that. In real life, what I do with these sometimes is I put these on before earnings because volatility is going to stay high. This trade can't lose right now. And then I take it off right before earnings come out. And that's probably what I'm going to do in this case. So we sold these options for 10. They're at 7. We sold this option. Well, we sold that option for 10. It's at 15. So that's bad. That's a $5 loss. But we sold this option for 10. It's at 7. So that's good. But anyway, all these options together, we bought these for 9. They're at 14. We bought these for 10. They're at 7. But in any event, all together, this trade is up money right now. So I'm going to close it and just take the money off the table and not take the risk for the earnings release. Because what happens after earnings come out, implied volatility is going to shrink, and then the valley of death is going to rear its ugly head. So I have 2 techniques that I like to do for earnings. One is I like to put on this straddle strangle swap about a week before, and that's why I did it last Friday, and then take it off right before earnings. I'll probably wait until right before 3 o'clock in case vol keeps going up. But I'm going to take this off with the profit, just pocket this money, and then we're going to see what Mara does. How does that sound? I hope you guys like this. I hope it wasn't too much over 5 minutes. Ask me questions in the comments, and I'll try my best to answer them. I love talking about options. I hope this does not bore you guys too much. Anyway, you guys have a wonderful day, and I will be back with more updates later. We'll take a look at this trade tomorrow after earnings are announced. Thank you so much.